Sir. Just brushing my hair with my head. That's what I do now. I got the cut. You know what I mean? You see the cut, man. Looking real. But let's talk about how good these markets were. You know what I mean? Daily. From this recent situation, we've been bullish pretty much for this last week. I'm gonna say this is Sunday, Monday, so Friday, Thursday, Wednesday, Tuesday, Monday. So Monday started from this consolidation area, broke out to the upside, never looked back. And now it's looking like that kind of liquidation up here. That this area tapped into, but if you get any more pushes up higher, still we can fill in, if you will, and sweep in the liquidity there. That is that's a bearish trend. That's February, which still is the high of the year. Coming up this new low of the year. Consolidated. What was this? So yeah, what's crazy also is that even though we did have a nice little bullish run the previous week, in the grand scheme of things, we're still in the consolidation block. So we really ain't really had no true run as far as in the daily time frame. No true indication of the direction it would continue in or the levels that it wants to attack, like these highs or these highs. Back here and completely feel it. It's still left over. So it could be one to push out that tech area. Which is I think about it, is it going up there to create a new high of the year? And what would it take for something to be so drastic? It's like the high of the year. It's like the high of the day. So yeah, that would also cause the dollar to be weak. So I would say one day it will start cutting interest rates. Bring it back down around the inflation to a certain number. I think we possibly can see a bearish situation. But this bullish situation could be the the precipice to the bullish move we may see if the dollar starts to show weakness, which would be, the trimming of the interest rate instead of more monthly increases. We will start to cave off of that number, drop back down to a more ideal interest rate number. Nothing that has to be inflated for a reason. So, but that's how we look at that. Um, so knowing from we had this bullish push for the previous week, even though we still in consolidation, and we should be expecting to see a rejection from where we had. Um, let's look at the 4 hours, see what we see. 4 hour. I am starting to see structure in the 4 hour. One thing I do see. Let's sweep for the lows right here. Put a look line to see how much of the low was there. The low. No, the death sweep to the low. So that's all good. Around. Yeah. So if you want to look at, areas of interest for pull out, it's got to that drawing right here. Looking at the open. Granted, that would have been probably uh, risky move to get in because of this resistance area. A lot of resistance right here, right here. And we get to that same area and you're expecting it to push higher, but just because of this green kind of, I think that was a move too. It came out here. It's Asian interest rates. I mean, Australian interest rates. That's why you see that bullish push. So put it like this. What I like to say is remove this big ass gap and take what you see, the real movement. Take that down and connect it here. So you have an indecision. Like I want to go out, then I'll be dropping. Shoot these lows and then put high. Because this is just a false implication on where you're trying to go. Chasing the excitement. That's chasing the excitement. And then if you buy when everybody's buying, when it seems like it's going up, it's exciting. It's exactly the prime area of reversals, especially if you look into the left. You'll see that it's a congested area over there. Some type of, you know, zone, demand zone, supply and demand, support and resistance. This is zone like that. So you're gonna see that rejection. But nonetheless, as you can see, a lot of buy setups throughout the week. Um, from Sunday, this one closed at 1 o'clock. So from Sunday, we still in the buy. What I do think, I think we could push higher, take out any liquidity that people had from April 14th when that market push high. So if you had any trades in this area, this is a 1 hour area, I want to say, it'll be good deal. That's the area you want to look for reversal because it's already shown proof that it can do that multiple times over. So we're going to drop down to the 1 hour. And basically, we want to look for an engulfing candlestick pattern off of, it'll be great if it's either off of support or resistance or within the bullish or bearish move, and there's still room for them to continue driving, nothing too crazy. And that's just how I place it as far as risk, as far as when I'm driving at night and doing Uber, like I choose risk and reward, and I choose to be, more less risk and more risk averse to, when I drive at night, lessening my chances of getting into an accident because there's less cars on the highway. Some may say it's a greater chance because it's dark, but I got pretty decent eyesight, so I have focus for the future, meaning the cars in front of me. And just like in trading, you gotta have an idea, a direction of where the market want to go, and then you trade in a risk averse way, trading with the flow of the pattern. And as we've been looking for the previous week, the pattern has been bullish, starting from the daily. And I think we were right around here from 23rd. Was that it? I think that was the daily push that we looked at earlier. So if you look at, and I also pointed out on Tuesday when we had that news push for Australian CPI, interest rates. I noted that these were the only areas that were a good setup so far for the week, and it looked like, I can't say it remained for that week, but it was Friday. Yeah, somewhat did, but there was still some good setup, a few more good setups. But nonetheless, when we know the direction and we can see, let's say for instance, we can see the daily. Let's go back to the daily. Let's see. The daily closed bullish with an engulfing on what day? That was Thursday, 27th April. Thursday, April 27th. That was our first bullish. Engulfing on the daily. So let's go back to that $1 and see how we could use this information on 27th. Knowing that was our first sign, and that's the only reason I'm going off our first sign from support of a bullish candle. And now that was an elephant candle. So we're looking at the 27th right here. Let's see. So basically, we gotta close this one open on the 15th. Okay, so that's when the candle opened. And it closed on here. That was a bearish situation, but for the 27th, we'll look at the 26th, 15th. Oh, look at the 27th, 15th. Yeah, that was high. And it took out that candle, created like a change of character also. So then we had structure going up, lower high, lower high, lower high. Did we break that with force? That's typically the situation you're looking into to get into a trade. But it's best if when you do, after you sweep the lows, like I just swept the low right here, you should instantly see a push higher, especially if you see some kind of definition on your sell trade. So we let that play out until here. Take out on motherfuckers out. And a fire ass setup with an engulfing, up here engulfing. Let's continue. So we really want to look at what area that has more strength as far as the best change of character probably would have been. Because this area was cool. Had stops below here. You would have got in right here and you would have targeted this area here. So you would have got there. But that also sets you up with a double high in a situation where you can probably aim for that. And that would also go into the belief and the understanding of that you had this train or bus situation that helps people move through the channels of the city is the same way. You know, you utilize your different sources and shit to move swiftly throughout the city. Like news releases and different types of confluences and divergence, convergence, that'll guide you on where you need to go. So nonetheless, we pushed higher here. And I would say after we took out this area, and also not only that, we took out this, we swept these lows. So you look at time frame, it's a long 6 a.m., 7 a.m., and let's see if we, that would have been an awesome entry. You know, that was on Friday. Let's go to Sunday. So, let's see. If it wasn't this area, that would have been the ideal area that I already pointed out on Tuesday. It was this one. Because none of these gave us an engulfing pattern as it filled in as clean traffic. But then you get this last push down, took out all these lows, further filled in this this fair value gap for people to add into their position and continue on the bullish trend. And that's what you said exactly happened. Even after finish that, that's where you get the engulfing pattern here. Get another one here, what, 5, so 6, 6 in the morning. This would be at 8. And now when you just get a road to the moon. Another one on Friday at 9. Everything was looking pretty good. Well biased. With all that buying pressure, especially looking at how the daily looks. And I'm gonna take a look at the weeklies, being that we started a new month. Um, I'm gonna say not overextended, but definitely fully extended. So that's a potential where if anywhere it could reverse from, this is the price is entering in where it can reverse on the daily time frame. So let's look at the weekly just to see from a larger standpoint what we're looking like. Week already started on Sunday, going into Monday, just bullishness off of a bullish engulfing too. So yeah, we definitely might be going higher. Okay, let's see. Yeah, let's see. We got any targets on the daily. old target. Target. So for right now, even after we got this equal high here, I would say those are pretty much good solid targets. Let's see if we got any targets on the 4 hour. I think we're done on the daily. 4 hour. And do 4 hour on the ski. I think that probably be the best area. I'm looking at it because everything else pretty got filled. Doing the actually today. That'd be dope. Let me check into that area. Other than that, we'll have to look for something here. So there's one within. Yeah, I think that's something going on with that. And the one I would just give us that engulfing pattern. Like I was saying earlier, you want to look for that scenario that engulfing pattern. You want to look for that anywhere from let's say 3 to 11. Not so long span, but it's a lot of candles to form an engulfing pattern and expand further. So let's see 3 or 4. So it looks like overall we're waiting for this candle to engulf this, and that would be a sell situation for the 1 hour. And remember, this could be the reverse on the daily. This could be a kind of trend situation. Remember, the daily is bullish. So let's be cautious on the sales we're trying to look for. That's not the bias. Bias is bullish. Weekly engulfing, is the key thing. So yeah, we're gonna wait here. 8 more minutes for this candle to close. Still get some bearish action in here. Try to close below. Yeah, let's switch to the news right quick. Show you some news you can use. Some news you can use. You know what I mean? Let's see, Sunday. It was yesterday. We had maybe business confidence at 8:30. Today, nothing in the morning. Then around 7:30, 8:30, we have a Westpac consumer confidence for Australian dollar and retail sales. Wednesday, inflation rate. Oh my God. CPI. Oh my God. Thursday, jobless claim. Again on Thursday, we have jobless claims, continuous jobless claims, and initial jobless claims. On Friday, Michigan consumers. So another crazy week on Wednesday. So we expect to see some type of manipulation to set up to get the larger banks and hedge funds and all of them to in that position. So a lot of manipulation, just like last week. One or two major directions on how the market was shifting, but overall the pool was on. So the dollar is weaker, Australian dollar is stronger. If that's the case, fundamentally we're gonna see a bullish run. Bella Bella. see. 5 more minutes left. About to engulf this candle look like. Let's see if we get it. And the reason why I chose that time from what I said, 3 to 11 is because that's the most manipulative, stop loss hunted, liquidity grabbing, structure building time of the trading day. That's London Open. That's London. That's NYC. That's the London and New York crossover, and there's New York Open and London Close. All that's between 3 and 11. So being that we're looking on the hourly, that's what, 8 hours? 11? Yeah, 8 hours. So we have for sure probably at least potentially 2 scenarios that can happen in 8 hours. We can get 2 bullish candles and a bearish engulfing. That's 3 candles. Then that bearish engulfing could continue with another one. Then we get a bullish engulfing. Or maybe 3 candles with a bearish engulfing. So it's 1, 2, 3, 4, 5. It's 6 with a bullish engulfing. And then bullish engulfing goes for another one that's 7. And we got a following bearish engulfing on the 8 to continue with the bearish trend that was followed by the 3 bearish candles. And, you know, if I'm making any sense there. With that being said, we know within an 8-hour time period, we should at least see one setup. Fuck. At least one. Not to say it's gonna work. Nothing. We can't even look at it because what's gonna work or what's not going. You just set your, as long as it's not too risky, set your parameters and let it run. Simple as that. But overall, that's what we're looking at. And that typically happens. A lot of manipulation, stop loss runs and whatnot. That happens around that time. And not only does it happen, but you can also take into account pre-London. Pre-London, that pretty much after midnight. Anything directly after midnight, I call that pre-London in a way. I mean, technically, pre-London is like 1:30 to 3 a.m. type shit. But any kind of structure that was built around that time, even from Asian session all the way up to 2 a.m., you would then look for London to open around 3 a.m. to create a type of sweep of that, of what yesterday did, grabbing the type of liquidity that may be lingering, and then continue in the opposite direction for in the opposite trend direction, which is going to take a whole hour for that candle to close for you to see that actually play out. And it's looking kind of weak. I don't think we're going to get an engulfing. We need to see a strong push. There's 15 seconds left on this hour. 10 seconds. 5 seconds. That's a teaser. Definitely a teaser. What I want to see, I would like to see another bearish candle, then followed by a bullish engulfing to continue us out to that other zone that I had from the 4, I think the day. That was our next bullish target. Of course, there's targets under 1 hour. But we just look for areas of liquidity to grab. So if we did get a step over here, I would target this area. But, index. And then Friday right after that. And then be done because I don't know what it's going to do with all this consolidation. I have no idea. Probably going down into this football. Just to be surprised if it drops that low. So we didn't get that engulfing, but let's see how what the correct characteristics of this candle is. Let's see, I look at smaller time frames to see if we get a connection with any type of displacement. So I think we have Asian session here. That's New York. Actually, Asian session here. This is London. So London created a high. Actually, London created a low, which is here. London. It didn't create the low, but it is pushing stemming from that low point. We already had bullish signs, and we were looking to sweep the area of liquidity. We get that. We can sweep here. We got displacement, but it's all interest. All interest. We sweep. Yes. No displacement. We get this high. We get that swell with displacement. Okay, you got it's tapped in right here. Attacking sell side liquidity 5 minutes. It would be 67, 80. If he one thing that I do want to point out, with us looking like we retracing up on this bearish rejection, I kind of down almost engulfed it. What I don't want to see, if I'm still looking for potential early signs of selling and reversing the clear traffic, I don't want this hourly to close above 67.90. That's our midpoint of that move. And the midpoint of a move, of a range of anything, depending on what you trade in, can be looked at or print as a premium or discount. And in the form of selling, anything above 67.90 would be a premium to sell. So catching the entry in that area is good, but the candle actually closing above that area is something that I'm gonna say that the bulls are definitely still in power. And then not only that, I'm monitoring to see what holds true. A candle that is creating a engulfing situation early on in its life of the hourly candle, or something that creates the large bulk of the move towards the end, like it's closing out strong, or it's closing out with the definition. Because I've seen some candles, prematurely grow and can easily close to being engulfing to the candle. But the last 10, 5 minutes, they reverse it, drop down, I'll go back up. Just compare. So time is everything. I know the way they put in orders, these large orders, I'm trying to see if they load them all up. And then in the morning, just been bogging down the system, or they have their own like time slot, like you do. Or they looked into the market in the tens about, you get the 20s, you get the 30s, like that shit. Definitely interesting. Reaching for. Yeah, 15 seconds. Let's see if we get a reverse on. I think I hear him coming up. Hear me, guys? Get outside. Bye, Bella. Bella's going to school, guys. Bus is outside to pick her up. fifth grader. Probably around the time I was feeling high school. Definitely go exposed to the markets. And I had that knowledge in the back of my mind. Peace, Will. She got on? Yeah. Good. Oh, we got a reversal. Let's see if this is going to be a. We're not going to get an engulfing that we wanted. Let's see if price still rejects from the zone nevertheless. We did tap into 50%, but we already been tapped into it. We just didn't close. So candles could very well close out up here. So like I said, we didn't close until we just tapped. No closes. Not even any no closes yet. Just high. So, look at the structure. Structure started from here to push high. That's a farther away, so you know you got to reverse. You know, this is just a stop point. This one is higher. So it looks like if we look at this leg, put this up, then we would think that we probably have more to go. So it's time to get this super recommendation. 67, 36 to 67, 96 plus 60 pips. From here, 57, 60 pips would be 68. 07 or 16, 17. Yeah, 17. 16, 17. And that would be up here. So it's a potential we could get this high now. Judging off the legs, the bullish pushes that we experienced in the past. So don't get too excited if we sell out. We could just be selling out to attack this area and bounce off of this, this resistance that could be turned into support. I don't think we have no more news. What's today? Yeah, just evening news for Australian dollar tonight. It was at about 7:30. Let's take a look at some of the other pairs that positively and negatively correlate with the Australian dollar. So let's look at the positives. We have gold. Let's take a look at gold. So what gold is doing. Gold did experience a drop on Friday. And we see a push from Sunday. And kind of more slight bullish continuation for the rest of the day. But it's kind of iffy. It ain't, it at least got to 50% of this. Seems like kind of in there. But still kind of iffy. Let's look at the NZD, USD. Also bullish with a potential sign of reversals, just like the Australian dollar. Yeah, NZD, USD. Australian dollar would have more than gone from them. So let's see negative course. So these pairs that I'm about to show next should be selling off. We have the Euro Australian dollar and the USD CAD. USD CAD extremely selling off. So that's a good thing. It's looking like it's starting to creating some indecision. It might be prime for a buy opportunity on the CAD. Let's look at the 5. Let's see anything weird. Nothing yet. Nothing yet, really. It's setting up though, I ain't gonna lie. This one is looking real good. If we continue to go higher after we swept this low and create a FBG fair value gap, we should probably go higher to up here, come back down, tap into this area for entry, and continue higher. It could be the move. And if that's the move, then we know that the Australian dollar should be prime for sales. Now let's look at the Australian dollar and also the same thing. More selling. But yeah, that's how you can, I guess it's a good way to leverage, if you want to leverage on the same pair. If your buys are not working out, maybe it's not projecting a strong enough volume to push price in your direction, and your direction is selling for Australian dollar. It could be an area where it's in profit, but it's just not, you guys not going to take profit in a matter of an hour to show that it's strong volume. And you can look at the USD CAD, Euro, the Euro Aussie to look for sales. So you still in the current and the correct trend because they're negatively correlated. So one is going up, the other should be going down. If that's the case, then you might not be making much on this buy or this sell, but you'll make it up on the buy. A little deeper, you can get into sell entries after you sell entry on Australian dollar, and NZD is looking like it's going to set up one and also go. And you can look to maybe hedge in that way, just in case one of them don't work out. You'll still have a one to trade that's positively correlating with the trend of the Australian dollar. Even though some offshore brokers allow you to hedge in position on the same pair. So the advantage is if you bought at 1 and then move down to 0, so now you're -1, and you feel like it's going to move down to -1, and then you wait, it does, you can take a sell. So you still in that buy. That's -2 now. But now you're taking the sell, and you typically take down that sell or kind of hold off false on that buy. If that makes any sense, that's how you can, and if you strongly believe in that reversal, you can go slightly heavier, on that opposing trade. That way, the more you losing, you will also be making that much more plus a little bit for profit. So it'll damn near be an even wash, but at least with spreads and commission, you won't really be too much out of pocket because you gotta think about all that with business. Can't just be out here making money and losing it all, but also paying commission and spread while you do it. So you gotta take inventory of what you got. Don't be too risky with your product development or your trading style, if you will, and put yourself out there into the market and do business. Trade anything out by there. It's cheap and what the price should be. I'll sell it at this price to you. I'll buy it back at a lower price. I feel like that's the habit. Everybody want to buy it, so I'll sell it to you. But I don't rather have it drop. And the reason it's going to drop because it's too much demand. When it's too much demand for something, well, no, it's too much supply. There's too much supply of something. The price drops. And also, when there's a lot of demand for something, and it's coupled with an overflow of inventory through projection models, one can also use a method to drop the price to move that inventory faster. That's the goal. So you can look at it both ways. You don't necessarily got to be, just because demand is high, then we drop the price so we can fill all these orders and people can afford it. Also, demand could be high and we can raise the price so we can max, we can pull the max profits out of this just in case if we are sitting on extra inventory that doesn't move, the discounted sale of those products will be covered. All the losses will be covered to the fact that when it was high demand for this product, we increased the price. And that's what you see when you see heavy volume and when they want to really manipulate people out of trade, you see the price go high and then news will come out and it'll shoot even higher with another 50 pips. But it always come back down to the median, back to the equilibrium, if you will. We kind of rest and pick his things up and see if it wants to sell on. Go bullish. The market makers will test the market. They have access to a lot of information that I'm gonna just keep it real. If they could get away with selling our information, we sign up for stuff, certain levels of surveillance, and I would have put it past them. So they say they should give available the amount, not direct entry price or whatever, but on average, the amount of traders that show interest in a particular trend direction. So if we have a high number of percentage of traders buying, and the market makers know that, then they can add to those buys if they want. Or they can create a buy by selling. You buy, you have to sell something to buy. you sell, you have to buy it back. So you actually put in buy, like when you sell something at the top and you take profit, you actually put in a buy order. So that is interjected in the market as a buy, which can cause the market to retest when it gets to a certain level of them taking profit. You know, it don't just like continue, you know, like lose steam in the way of continuing to sell off, but the candles are getting smaller. Yes, that does happen, but that's the major point of them taking profit is when you see candles going down, selling off, and you see it wick up. Then you see another candle go down. Maybe close solid. Another one kind of go down, but then wick up. The next three candles go down and wick up. Then you get a reverse. Like that's when you know, it's a true sign of reversals. Those regression wicks are a telltale sign of areas that the market possibly want to reach in, in the future. Not right now. We're about to remove ourselves from this area in a strong way. You know, so we got 3 more minutes left. We're gonna wrap this live up. All right, guys. Well, we did. We did miss Sunday's preparation for the week, but we'll probably do a video maybe this evening. I know I wanted to do explain the video in the future with my bro, to show him especially the amazing week he had during all that crazy news last week, which is crazy, you know. But nonetheless, I'm gonna also have in the future a back testing video where I'm gonna go over 3 months of just the engulfing pattern, like these arrows that you see, this the color change engulfing that you see on the screen. Here, 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 here. Just go over those, but at a specific time, and write down all the ones that worked, the profit, and worked as far as or didn't work for hitting stop losses. And we're gonna look at that over a 3 month period and just see what the win rate is. So we can figure that out, turn that into an educational video. But nonetheless, we'll be back tomorrow, 6:30 in the morning, to go over these markets, see how that. So.